Welcome to SpeedyPodz episode 11. Our mission today is a rapid-fire roundup. We're looking at the biggest moves in AI innovation and, well, Wall Street volatility from this week's sources.
Yeah.
We're going to get into some major tech shifts, some pretty big financial surprises, and how the stocks reacted.
Yeah, it was definitely a week of strategic shifts, especially in that AI arms race. For months, we've seen Microsoft leaning really heavily on partners, right, like OpenAI. But now, well, they seem to be making a serious solo play.
Okay, tell us about that, this solo bet. What exactly is this new thing they've got? And why now? Why go it alone?
So they kind of quietly launched MAI Image 1. That's their first proper in-house text-to-image model. And the big deal isn't just that they built it. It's that it immediately landed in the top 10 on LM Arena.
Wow, okay. LM Arena, that's the big human-voted leaderboard, isn't it? Top 10 straight away.
Exactly. So that gives it instant credibility, It shows their diversification strategy might actually work. They're talking about authentic photorealism and speed, for rapid iteration. Seems they want to prove they don't need to just rely on partners for visual AI stuff.
Interesting. So while Microsoft's working on visuals, Google is kind of rewriting the rules for search. This speech-to-retrieval thing, S2R, sounds like they're just throwing out the old playbook.
That really is the revolutionary part, I think. S2R completely skips the need for, perfect speech-to-text.
Skips it entirely. How does that work?
Well, instead of transcribing your words, it takes your voice query and basically turns it directly into an intent-based embedding. It's matching the meaning behind your voice straight to the search results. The goal isn't perfect words, it's understanding what you actually want, your retrieval intent.
So it doesn't need to hear me perfectly, just understand what I'm getting at.
That's the idea, understanding what you mean, not just every single word you said.
Okay, wow. And while these U.S. giants are doing their thing, the global competition is heating up too, right? Ant Group in China.
Yeah, Lingit T. That's a major signal coming out of China. Ant Group, the huge fintech company, just released it.
That's big.
Massive. A trillion parameter model. And crucially, it's open source. That scale shows huge commitment, and making it open, that suggests they want to really compete globally, maybe rivaling OpenAI, DeepSeek, especially on reasoning and code.
Okay, so the innovation pace is just blistering, but Wall Street maybe getting a little shaky about the payoff. We saw that hit Oracle this week.
Absolutely. Oracle, a top 10 company, right? Fell nearly 7%. That was its biggest drop in one day since January.
Ouch. How much market cap was that?
It raised about $65 billion, just like that. And this is despite having deals with OpenAI, Meta, xAI, all the big names. Investors just seem worried that the actual financial boost from all this AI infrastructure spending, well, it might be smaller or slower than they first thought.
So the spending's real, but the return is the question mark.
Exactly. The market's really scrutinizing the ROI on these huge AI build-outs.
And speaking of market shockwaves, politics hit the pharma sector. Eli Lilly, Novo Nordisk, their shares dropped.
Yeah, that was tied to President Trump suggesting the price of Ozempic, which is Novo's drug, could fall dramatically. He mentioned maybe $150 a month, down from a list price of, $1,000?
$1,000 down to $150. That's huge.
It is a huge headline number, but analysts were quick to point out the complexity here. That list price often isn't what's actually paid. The true net price after all the insurer rebates and discounts is often already 60% to 70% lower.
Ah, okay. So the real financial hit might be less severe than the headline suggests, even if the political pressure is real.
It's definitely complicated by those existing discounts. The political noise is one thing. The actual net pricing is another.
Got it. Okay, switching gears a bit. We did see some bright spots, some resilience elsewhere in finance, regional banks, for instance.
Yeah, kind of a relief rally there. Stocks like Zions Bancorp, Truist, Fifth Third, they bounced back. Their earnings seemed solid, which eased some of those general worries about credit quality. BofA even upgraded Zions, basically saying the sell-off before was excessive.
And then there was American Express, big surge there.
Oh yeah, Amex flew, up over 7% to a record high. They beat earnings, raised their full-year guidance, expecting revenue growth around 9–10%.
What drove that? Anything surprising?
Well, kind of surprisingly, yeah. It was apparently driven quite a bit by the refresh of their Platinum card. They raised the annual fee pretty steeply from $695 to $895.
Wait, they raised the fee and more people signed up?
Higher than expected initial interest, yeah. It seems the perks, like the $400 annual dining credits, were a really big draw. It suggests that, the high-end consumer is still spending pretty freely.
So wrapping this up,
yeah.
What's the big picture takeaway for you, for the listener?
Well, it really feels like a split story, doesn't it? You've got this incredible acceleration in AI innovation. Microsoft doing its own thing, Google rethinking search from the ground up.
Right, breakneck speed on the tech side.
But then the financial market is hitting the brakes a bit, asking tough questions about the payoff, like with Oracle, or even the cost, thinking about things like data center energy use. And yet, pockets like luxury spending with Amex or regional banks stabilizing, they're showing real resilience.
It's definitely uneven. Okay, so the final thought to leave people mulling over.
Yeah, let's circle back to Google's S2R for a second. If AI really can start to understand your intent better than your actual words, what does that imply? Think about the future of communication, how information gets filtered, maybe even how we understand human motivation itself, not just in search, but, well, potentially everywhere. What does that future look like?